Pharmacy Podcast Nation, you know, it's a good day for me when I get to have pharmacists in action, in presentations with me. But today is a subject that I need a lot of help on, because if you want tax advice, do not come to me to ask for that tax advice, because I'll probably get you in trouble. Just like if you're a pharmacist, give the pharmacist your attention for clinical information. Once again, don't come to me. I'm a good parrot. I'm probably one of the most intelligent parrots in the pharmacy industry, but for clinical and tax, that's not my bag of tricks. It has to be the experts. And today we are bringing on several experts, as well as a pharmacy operator and owner, to this podcast, which is brought to us by RxSafe. RxSafe has been an amazing partner of our network, bringing content to us. And we're doing this in two different ways. You're seeing us live on the webinar, as well as accessible through a YouTube page that will be repurposing this content. And then if you're listening to the audio form, we very much appreciate you. If you think there's another pharmacy owner out there that would like to listen to business information that's brought to us by trusted professionals who are deep into helping pharmacists and pharmacy owners manage their money and finances better, please share this podcast with them. Without further ado, I would like to introduce our panel today. I'm excited about this because one of them is a brand new member of the Pharmacy Podcast Network, and that is Mr. Derek Delaney. He has an amazing podcast called PharmD Money. Welcome, Derek, to this presentation.
Thank you, Todd. I'm happy to be here.
Also, no one is gonna miss out on this name. This guy is just synonymous and tagged in and plugged into all things financial for the world of the pharmacy owner. The Sykes family have been producing some amazing content on their YouTube channel. I educate myself on that and share that content. Olin Sykes founded Sykes and Company. I don't know how many years ago. I have to get your input, Scott. But Scott, you are the son of Olin, and I'm so glad that you're here to help us navigate this subject today.
Yeah, glad to be here. Thank you for having me. My dad, I think he started about 35 years ago, Todd, and I've been on board about 10 or 12 years. And so it's been a fun ride ever since. So we're just glad to be here.
Thank you so much. You guys are the goats of the CPA world of community pharmacy and pharmacy business. So thank you so much.
Appreciate that.
And we couldn't have a presentation. We couldn't have one of these events without a pharmacy operator owner here. I want to introduce Amy Strumer to the Pharmacy Podcast Nation in this presentation. Amy, thanks for being here.
Yeah, happy to be here.
First of all, I'm going to start out with Amy. Tell us your pharmacy location and the setting of your pharmacy, the mix between patients in the community setting, or if you're doing some assisted living, or even specialty. Kind of give our audience a little information on your background.
Yeah, so I am a pharmacist and co-owner with my husband of Medicine Man, Bonners Ferry Pharmacy in Bonners Ferry, Idaho, right on the northern tip, right next to Canada. And we are located inside of a grocery store, pretty small pharmacy, 600 square foot. And we do basically retail pharmacy, but we also do, as you see, packaging. We do med sync, we do assisted living as well, bubble packing for them. Yeah, for the most part, a little bit of compounding, but not much anymore.
Thank you. If you're listening to the podcast and you're not getting the visual, Amy has an RxSafe technology, a machine right behind her. And I said to Derek before we started recording, it looks better than a Christmas tree. It looks, I'm into Star Wars, guys, and science fiction, so I absolutely love stuff like this, but it looks great. So today's subject, once again, it's just amazing how intense it is to run a community pharmacy, independent pharmacy, and the guidance that we're going to get from this panel is so important. And I think it's necessary. Coming to the end of the year, where we get an opportunity to listen to some strategists to dig into what is Section 179 and how does this benefit the business of pharmacy. So I'm going to start out with Scott. If you could kind of elaborate and set the stage, what is Section 179?
So Section 179 is an area of tax law here where essentially Congress wanted businesses to be able to purchase equipment and and stimulate the economy with the purchase of equipment. And so what they did is they introduced Section 179 in the tax law that essentially allows pharmacy owners in this particular case to essentially write off up to 100% of that purchase price in year one. And even if you finance that, for example, if we're talking about a robot here, even if you finance that robot, you can essentially write off or deduct up to 100% of that robot cost in year one. So very valuable tax benefit there from a tax planning perspective, and can substantially reduce taxable income and save you some taxes for sure.
Thank you, Scott. So Derek, when I think of what you've laid out on PharmD money and many of the podcasts that you've put out, I understand that there are those nicks and crannies of tax strategy that can become very confusing. How have you leveraged and/or can you tell us any stories about the strategy that you might present one of your clients with regards to Section 179?
Yeah. So like you mentioned earlier, Todd, I think it's always extremely important to work with people who are professionals in the specific industry you're looking to dive into. So when it comes to 179, I have a lot of clients that, I shouldn't say a lot, but I had some clients that experienced that and had the opportunity to take advantage of it. And the first thing we do is we always collaborate with their CPA. So I think it's always important to make sure that you deal with an expert who understands this more than anybody else in our world, essentially. One of the big strategies we use 179 for, or at least that I have been a part of with pharmacy owners, is to really bring down their tax bill in a year that allows us to do something else in that year because of that lower tax bill, if that makes sense. Because again, everybody knows here that 179 is not eliminating that tax. It's basically pushing it out farther into the future, where when you end up selling that piece of equipment, you'll have recapture issues and stuff like that. But in the year of taking 179, it allows us to do other unique things from a planning standpoint for those pharmacy owners.
That brings me back to Amy. You're the one that we're caring about and worried about as a business owner. And so much of the intensity of DIR fees and insurance and employment costs and just managing your inventory and really navigating when is it time to pull the trigger on larger purchases and how can you use Section 179 to mitigate the impact of that cost of that piece of equipment, for example. Amy, can you give us an example how your husband and you may have used Section 179 in the past and what the outcome was just from a story perspective?
Yes, we actually are clients of Sykes and Company, so they are our experts, and they at the end of every year ask us to make a meeting with them and go over our tax management planning to see what kind of tax due we'll have at the end of the year come tax season. So each time we do that, they generally say, oh, is this the time to pull the trigger and maybe get a larger purchase so that we can try to mitigate that tax amount that we have to pay. And just even, I believe I got this machine, the RX Safe behind me, July of last year. And so it was the previous tax season that they recommended that we make a large purchase, and it definitely helped us with not having to pay as much in tax. So.
Scott, what are some other examples that you can give us for owners that are interested in using Section 179 tax strategy?
Yeah, so you have Section 179, which can be used for machinery, equipment, point of sale systems, and potentially some improvements as well to the pharmacy. If you're making improvements to the inside of your pharmacy, you certainly could have some opportunity there with 179 and writing everything off. The key thing about Section 179, it's very flexible. So you could, let's just say you purchased a $100,000 robot, for example. You can essentially write off $100,000 of it in year one under 179, or you could just say, I'm only going to write off $50,000 this year, and then the other 50 you write off over a period of time. So 179 is very flexible in that regards, but you also have what's out there is called bonus depreciation, which is very similar to Section 179, but it has its advantages as well, in that you can actually create losses in a lot of instances with bonus depreciation. And when we're talking about tax planning, which Amy just touched on, if you're able to create some losses and plan around those losses, you could potentially offset other income in other areas, thereby reducing your tax bill. So there's a lot of planning that can go on here with 179 and bonus depreciation. And I'll also add there that your state tax differences are very important when determining with your professionals which is a better option, whether it's that bonus or 179. So a lot of planning can go into that, but you've got a myriad of options here for pharmacy owners.
So I don't want to put you in boxes, but when I think of Derek versus Scott, I'm thinking of Derek focusing on the individual and the income capacity to be able to take full advantage of what that individual is making to set them up for a great retirement, for example. And then I look at Scott as managing the health of the entire operations and business, or better yet, multi-businesses, because we have pharmacy owners that are listening to this presentation right now who have 3, 5, 6, 12 locations. And that starts to become really complex when I think of that. Derek, can you kind of give us an examples of timing and in thinking of the individual outcome, the owner, their physical income, and how this might play into timing and using Section 179?
Yeah. So on I think you hit it right on the head, Todd, where I focus more on the individual and family planning when it comes to pharmacists, and usually leave the business side to people who specialize in that, like Scott and his firm. But one of the big things that pharmacy owners are confronted with or have the opportunity to be more efficient with is the cash flow within the year that gets saved, or that cash flow opportunity that's there because of Section 179. And that's always an interesting thing that I wondered, is if it's more important for a business owner in a pharmacy to buy a big piece of machinery at the beginning of the year, knowing they have that big depreciable asset that they can use to offset other income they know they're going to experience later in the year, which means maybe they have to pay less in quarterlies. And if that's the case, they have more free cash flow to take advantage of other things throughout the year that may help them on the personal side.
I'm not sure who to ask this question to, so I'm going to ask the question, and then someone out of the three of you, and that is, I'm thinking of the pharmacy owner who's thinking of selling their business and what impact this has on their operations. So would it be, Scott, to ask you, so I'm a pharmacy owner, I have 3 stores, I'd like to sell off one of those stores, I wanted to purchase some equipment before the end of the year. Is there any implications to that story or that setting?
Certainly, anytime you're going to sell a business, whether you're going to sell the stock or the assets, and you own multiple pharmacies, there's a lot of planning that goes in around that. So that's a great question. Obviously, the answer is going to be yes there. Depending on the situation, what you're selling, again, whether stock or assets, which assets are you selling, so on and so forth. So there can certainly be implications to these aggressive write-offs in terms of recapture. If you may have to pay essentially recapture that depreciation you've already taken in previous years, for example. So there's a lot of planning that goes into that for sure. Absolutely.
Amy, what concerns do you have as a pharmacy owner with regards to purchasing? Let's say you came to Scotty and to Sykes and you say, listen, we're expanding and we want to start delivering more, maybe in a wider area, and we're going to need some vehicles. Have you ever utilized this approach, Section 179, for delivery vehicles?
I have not. It is in our radar, though. It is something that we're thinking about doing in the near future. So definitely something I'm interested in.
Yeah, I'll just chime in there, Todd. There's a lot of opportunity with vehicles, obviously here. You can use 179 for vehicles, and you can also use that bonus depreciation I mentioned, which is actually 168K, Section 168, which is the bonus depreciation there is a little more aggressive, can be for vehicles, because there can be some limits with the 179 when it comes to vehicles. But if you can get a vehicle, believe it or not, Congress wants you to purchase large vehicles over 6,000 pounds because the depreciation is much more aggressive on what you can write off there. So they want you to purchase those trucks and SUVs essentially, and to get that more aggressive depreciation. So again, a lot of flexibility there with vehicles, and the opportunity is certainly there.
So what about the world of a pharmacy owner, or the scenario per se of a pharmacy owner wanting to expand a physical location? So I'm really curious about commercial property. That is, the pharmacy owner wants to purchase another location. How does 179 fit into this?
I'm glad you asked this question. This is a great question. So there's if a pharmacy owner owns a building or is purchasing a building, the rule of thumb is what you'll typically hear from a CPA and an attorney is to put that in a separate LLC. And when you do that, it's what they call a passive entity, if you will. And when you have a passive entity, if you have losses with passive entities, those losses you cannot use against active income. In other words, the pharmacy income, you can't offset. Whereas if that building is inside the pharmacy entity itself, you have an S Corp pharmacy and you put that building in the name of the pharmacy there, it becomes an active building, if you will. And a building is typically depreciated over 39 years, which is an extremely long period of time. But there's cost segregation studies that will allow you to take that building cost, let's just say it's $1 million, and they will break down the building costs into individual components. And those individual components, electrical fixtures, lighting, can fall into these smaller buckets that you can then use 179 and bonus depreciation to write off in year one a large portion of that building. So you might be able to take $1 million building and put $400,000 into these other buckets where you can use 179 and bonus to write it all off in year one and create a $400,000 write-off in year one, essentially wiping out income, creating maybe some losses there to offset other income, so on and so forth. So buildings is a huge opportunity for pharmacy owners when we're talking about 179 and bonus depreciation. It's just how you got to speak with your advisors to make sure it's set up correctly so you can take advantage of those cost segregation studies.
So this next question, Derek, isn't necessarily about 179, but I am thinking of the pharmacy owner who's listening, including Amy and her husband. And that is, what if I had a stellar year? I've given myself a salary of X number of dollars. I know I'm going to have some income that's going to be maybe unusual for the year. For example, with the pandemic, we've seen more healthcare services, being utilized by the community, by people that are being served by pharmacies. Do you ever give an advisement to be taking that over the income that the pharmacy owner is used to, or the pharmacist is used to, and putting it into some kind of investment?
Yeah, well, from a tax planning standpoint, if you find yourself in an irregular year where you're earning or getting compensated a lot more than in previous years, it's important to look at ways in that year to reduce your taxable income. So real common strategies there would be to make contributions into traditional IRAs. However, we're in a tax environment right now on the personal side that's pretty good compared to historical tax rates, especially on the federal income tax bracket side. And these preferable rates could be going away here in a couple of years if these tax cuts that were enacted back in 2018 go away starting in 2026. So even if you find yourself with a higher income in a given year than what you anticipated, it may make sense not to defer that income into something like a traditional IRA and not pay tax on it now. It may make sense to actually throw it into a Roth IRA, take your tax hit now, knowing that you could potentially be in a higher environment later on in life. So it's all about that balance of what you think your tax liability is going to be this year. Do you want to lower it compared to what we think your tax liability could be 5, 6, 7 years down the road, and making the best judgment call at that time with those two considerations in mind.
Derek, thanks for that. I was thinking as you were saying that back to one of the points that Scott made, and Amy, that is the world of improvements. When's the last time that you made significant improvements to your pharmacy operations, your pharmacy environment, and talk about that with regards to tax planning for the end of the year?
Yeah, so I would say the most recent would be the RapidPakRx that I got in July of, I guess it would be 2020, excuse me. July of 2020, we got it then.
It's all like blurring because of
it is such a blur. That's the most recent one we've done, but we've done other ones in the past as well, purchasing a Parata counting the max counting vial counting machine as well. But it definitely was helpful in our tax mitigation to help just really put the money where we wanted to put it and not necessarily towards tax planning and things like that.
Scotty, what about the improvement side of things? So I'm a pharmacy owner. I know that maybe I don't have a drive-through, for example, and I want to add on some major structure that's going to be pretty expensive. Can you kind of expand upon that aspect of this benefit?
If you are adding or enlarging a building or messing with the integrity of the structure of your building, you could run into some limitations there as far as aggressive write-offs with bonus depreciation or 179. So anytime you're enlarging your building or adding on to your building, you definitely need to speak with your advisors to make sure that you're going to maximize your situation there from a write-off perspective, because there can be some limitations there. And let me just say that anytime we're talking about depreciation here and 179 and bonus depreciation, and especially as we get towards the end of the year, the equipment, whatever you're purchasing, the capital asset you're purchasing has to be put into use in the year you're going to write it off. So you have to be able, for example, with a robot, you can have it installed there the last day of the year, but you better be able to run a prescription through there to show that it was in use. That's going to be a very important detail there.
So I purchase a RapidPak on December 30th. I better get it pumping out a prescription 31st, right?
Yeah, exactly.
Very good. Well, don't wait. If you're listening to this,
yeah, this is the time to get going. Yep.
Let's call Sykes and find out how to work this best and make sure that it works for the pharmacy owner. I have such a big heart for pharmacy owners and what they do for their communities and how taxes can be so stressful. I know myself when I launched 100% of my income coming from the publication in 2019, the tax experience that I had in 2020 for my 2019 year was a nightmare, and it's still a nightmare. I actually still owe taxes, so I actually need to get a hold of another planner just the environment that I'm in that's so different. So I think of Amy and your team and in your operations and what you're doing and how you're growing. Where do you see pharmacy owners making the biggest mistakes? What are the common mistakes that are taking place in tax planning, and when they should or should not be using Section 179, Scott?
That's a great question. One of the biggest hindrance to any tax planning is to be the accounting. If you do not have the accounting system fundamentals in place, you don't know where you stand. And if you don't know where you stand, you cannot tax plan. So that's always rule number one, always will be, and you'll never hear us stop talking about that. So the fundamentals have to be there. When you have the accounting fundamentals and you have and you know exactly where you stand month in, month out, you can then put together projections, put together models and strategies to offset hopefully any tax liabilities and improve the cash flow in the pharmacy, because tax planning is all about cash flow and keeping more cash in the pharmacy and in the pockets of the pharmacy owner. So, which we all know cash is king in pharmacy. So very important piece tax planning is, but you got to have those accounting fundamentals first and foremost.
So my other question that I'm thinking about is the world of employees and how I may need to take an opportunity to hire more people based on my workload, whether that be technicians or people at the front counter, customer service, or the most expensive of those employees, maybe another pharmacist. How does tax planning, and is there any benefit in the world of 179 if I hire a new employee, especially the most expensive ones, Scott? Is there any way of showing losses in that manner?
Hiring employees would not be impacted whatsoever by Section 179 or a bonus depreciation setting. So that would be completely separate and distinct. Now, could be potential credits involved around hiring. There's a few of them out there, like hiring a veteran or something like that, but completely separate and distinct there as far as depreciation and hiring.
Very good. So what are you thinking about, Amy, in this coming year, 2021, and closing out? Is there anything that you're planning to do for your pharmacy that you could leverage this tax strategy for your own pharmacy?
Yeah, for just this year, we have decided to upgrade and get the newer versions of the Icon counting pill machines. So that was one of the updates that we made. We haven't had our tax planning meeting with Sykes yet, but we will very soon here. So that's kind of what we're looking into.
Is there minimums that I have to spend as a pharmacy owner in order to get this benefit? Scott, you mentioned $100,000 purchase or more, and that's easily spent when I'm talking about some, higher level automation and systems. Even new pharmacy software systems can be quite expensive. Can you tell me if there's limitations on the Section 179?
Section 179 does have some limits. I believe the write-off limit is $1,040,000. So it's not really in the ballpark for many pharmacy owners. Bonus depreciation, no limits as far as that's concerned. So for most 9 out of 10 pharmacies, not going to be a problem, any limits whatsoever.
If the attendees have any questions that they'd like to ask this panel, you can definitely put them. You could raise your hand. We can have you become part of this conversation. I think of navigation of the money that's coming into an operation, what money is going out as expenses, and more importantly, where deductions can be made for end of year. It's by the time we get this this presentation out, it will probably be early November. So I'm thinking we have less than 60 days to make some new moves. Scott, when is the best time to actually get started in order to get into the Section 179 benefit? Is there I know we were talking about putting it into the device into action on December 31st, but that seems like there's a lot of risk in waiting to that length of time. Amy made comments about purchasing a piece of equipment in July. What's your advice with regards to timing?
Sure. We were at the NCPA conference a few weeks ago, and you definitely could hear the supply chain issues impacting a lot of the vendors there, including equipment. And so, in fact, we heard one vendor say it's just not going to happen this year. If you go ahead and place your order now, it's not going to happen this year. So certainly, you want to get in line now, sooner rather than later, if you're looking to put that equipment in use and get that tax benefit in this current year. The equipment can be new or used. In many cases, can be new or used equipment. So used equipment for the pharmacy could still be eligible for that 100% write-off, whether that's 179 or depreciation, as long as it's new to you. If it's a piece of used equipment, but it's new to you, you can still get that full write-off. So something to keep in mind there, and maybe perhaps a secondary market that's out there for some equipment.
So you mentioned LLCs. If I have 3 pharmacies and they're each labeled under a different LLC, can I sell equipment between those 3 locations and take advantage of the benefit?
Related party issues, that's going to fall under the related party issues, and you're going to run into a roadblock there. So not gonna fly.
Not going to fly. We have a question from one of our participants that says that they're selling their pharmacy and they wanted to use something called 1031 exchange. Do you actually know what that stands for and how to answer that question?
That's a 1031 exchange. Real estate is really the big area involved in that. We do not specialize in 1031 exchanges. If that need arises, obviously we bring in specialists in that area. It is a unique area for sure.
And I think it's important to note too that 1031 exchanges basically defer your tax liability on the sale of that business or that property, which right now you want to be very careful about doing that with the possibility of capital gain tax increases happening in the future. So that's something you're going to want to be aware of if you think a 1031 could be something you want to take advantage of moving forward.
Thank you, Derek. That's a really good point.
Yep.
We have another pharmacy operator that has a question that says their income is reduced by the expense cost of the purchase alone, but a write-off of the depreciation also hits the income remaining. So is that the case? Is there the write-off of the depreciation also hits the income that's remaining?
Not sure I fully follow that, but example again, if you have that $100,000 robot, for example, you're essentially going to have an expense of $100,000 if you are going to take advantage of the 179 or bonus depreciation options out there.
Yep. There's a second part of that question, which is, so if you're trying to reduce your income by buying a robot that costs $10,000, could it result in a $10,000 indirect tax write-off, and then also corresponding in separate decreasing that income?
Well, the $10,000 in that example would be a write-off, decreasing your taxable income. I hope that answers that question.
We can actually follow up with you too, Scott, and please, there's going to be contact information in our show notes for all of our participants in this panel, so that you can reach out to Derek, Scott, and Amy through LinkedIn connections. So just be aware of that. I think that there's a lot of pharmacy owners that are looking to change some of the services that they're providing that aren't attached to reimbursement models, not attached to Medicaid, not attached to some private insurance, maybe something that's cash-based. For example, we hear a lot of pharmacies starting to think of the supplement world as well as the veterinarian opportunity for pets and pet meds. Is there anything in starting a new line if you invest money into, let's say, marketing materials or fixtures or something to support that new line, that we can take advantage of Section 179?
Great question. You're going to have your expenses normally associated with adding any new business line. For example, if you are investing in capital equipment, a piece of equipment, for example, you could potentially take advantage of the 179 opportunity there. But you could also run into research and development tax credit opportunities there as well when you're introducing a new business line. Great question. A lot of opportunity there with everything, especially obviously going cash-based revenue, which can be very beneficial for pharmacies.
So let's talk about real quick and review just for the audience, for our listeners. If you're listening via the webinar on YouTube or on Pharmacy Podcast, qualified property. So I want to go through these. Heavy equipment, which I don't know if that necessarily fits pharmacy. It says certain vehicles, machines, tangible personal property, office equipment, office furniture, computers, software. Obviously, I think that's where we have our pharmacy automation playing in through purchasing systems through RxSafe. And then it says certain improvements to qualified real property. Scott, I'd like to go up above and jump into the certain vehicles. What's that mean by certain vehicles?
I'm guessing you're looking at the 179 eligible property there. Yeah. So certain vehicles, some vehicles won't count. I don't know what they are off the top of my head. I really don't know, but it doesn't apply to pharmacies. I can tell you that. So your delivery vehicles in a pharmacy is going to be eligible for the 179. The certain vehicles, those exceptions don't apply to pharmacy.
Scott, correct me if I'm wrong, but with that too, if you use that vehicle for, is it more than 50% for personal use, then you're excluded from taking 179
yes,
altogether?
That's a great point, Derek. Thank you for bringing that up. To take these aggressive depreciation, you have to use at least 50% of it for business use. And there's different ways of handling that if it's not 100% business use. So do keep that in mind. And that's a good point, Derek.
Amy, are you and your team using delivery vehicles right now of your own?
Not at this moment. No, we don't do enough to really warrant it, but it is something that we have on our radar.
Okay, and now this is the one that I wonder the most about. And this is listed once again, as you caught me reading from the 179 description, Scott. But what is tangible personal property?
That's going to be the equipments, the office equipment, things like that, the tangible property, this pill counter Amy was talking about, those kinds of things.
And then obviously, if I have a new center that I'm setting up, a section in my pharmacy where I may be doing a counseling center, or I hired a nurse practitioner to come in and start doing some work for almost like a minute clinic section, that's fixtures, that's like office furniture per se, that's all included too, right?
Yes, sir. Yep.
Very good. What type of other creative ideas do you have to share with pharmacy owners who are listening in right now that play into using Section 179? Have I missed any of the categories?
I'll just say, well, bonus depreciation is because the 179 gets a lot of talk, but the bonus is also extremely powerful. And again, you can create losses in some instances with bonus, and you need to understand the state differences there with your advisors. But the rule of thumb with any pieces of equipment, capital equipment, is you got to put the economics first. Does your pharmacy actually need this equipment? Does it make sense in your pharmacy? Are you going to be able to use it to benefit your pharmacy? So on and so forth. And the depreciation's kind of the tax benefits is second. And sometimes we see where, oh, I got this tax bill, I need to buy something, and it's it shouldn't be like that. So always put the economics first in your pharmacy, then the tax.
I think that's a great point, because I think that's the first thing people don't think about that they should. especially when they get to the end of the year where they think I'm going to have a tax bill. I should go out and buy something that's going to help my business and get that deduction. In all actuality, I have found plenty of times where not doing that, paying your fair of taxes and keeping that cash available to you in a future year could be far more beneficial than getting the deduction in that current year. But I don't think a lot of business owners think about it that way, which they should.
Absolutely. Glad you mentioned that, Derek. Derek, in kind of closing out today, can you give our listeners just an overview on what candidate and what individual would reach out to PharmD Financial Planning in utilizing the services that you provide?
Yeah, so like we mentioned before, PharmD Financial Planning is built for pharmacists and their families more on the personal side. So if you're looking for any sort of business advice or more of a CFO service, that's a phone call you want to make to Scott and his company. Anything on the personal side, where if you're thinking about retirement or college planning or just investment management or other personal income tax problems you may be experiencing, that's something that my firm and I specialize in. We could help clients with that if that's something they feel would be beneficial for their situation.
In closing out the conversation, Amy, do you have any advice for pharmacy owners listening in right now? And it doesn't even have to be about taxes. Is there anything that's happened over the year that you've realized as a pharmacy owner that you could give some insights?
Just to stick with the tax part of it, definitely, as Scott was saying, just plan early. We tend to plan really early. For example, even with the supply chain issues that are going on with COVID and such, we ordered our icons for this year back in April and they still haven't arrived, but they will be, I suppose, by mid next month. So you have to plan early. You have to plan early so that that equipment is in use by the end of the year if you are going to use that. And exactly like Derek was saying, you have to decide if it's the right fit for you. I would not have purchased my RapidPak if I didn't know that I needed it. Don't just do it for the tax purposes, such. Make sure that you're using something you can actually implement and will make a difference for your business.
Excellent. And Scott, in coming to you to wrap up the presentation today, do you have any advice for pharmacy owners listening in right now as we're closing in the end of 2021?
I guess good piece of advice is to get those books in order and start your tax planning now, because there's definitely some strategies to look at, because once you pass the end of the year, those strategies for the previous year are cut in half. So you're going to be very limited if you wait till after the end of the year. So go ahead and get going now and get this stuff in place.
This has been exceptional. I want to say thank you so much to RxSafe for being such a consistent provider of great information that goes far beyond just the equipment that they service and sell and help you to strategize. They're really concerned with their customers' success. It makes absolute sense that they would be. I want to give a special thank you to Scott Sykes and your family. They have been champions of community pharmacy for years and just constantly bring such great information to pharmacists at conferences, at webinars, and of course, through this presentation. So thank you so much, Scott, for being here.
Thank you. Thank you for having me. It's been great.
Derek, thank you so much for not only joining the Pharmacy Podcast Network, but for being part of our webinar today.
Oh, I am very glad to be here. Thank you for letting me be involved in this conversation.
And Amy, the star of the show, thank you so much for what you do. We're absolutely indebted to our pharmacists throughout the nation and how intricate and important you are to your community as a pharmacy owner. Thank you so much for being here.
Thank you. Thank you so much.
And then our participants, thank you so much for spending your time. We know how busy you are. We know how stressful it is to run a community pharmacy business, just from the stories that we hear over and over again. If there's absolutely anything that RxSafe can do for you, advisement, advice, helping you to implement the right technology at the right time, please reach out to RxSafe. You can go to rxsafe.com and go into our show notes. We'll have connections to several members of the team that you can reach out to. And thank you so much for being part of the Pharmacy Podcast Nation. Thank you so much for allowing me to be part of this panel and being here with you today. And with that, we're wrapping up, and we'll talk to you next time.
Thank you.